something is happening to gold right now. And almost nobody is talking about it the right way. Gold, the one asset that people trust when everything else breaks, is falling, not rising, not holding steady, falling. And the timing makes it even more disturbing, because this isn't happening during peace or stability or economic calm. This is happening during global tension and uncertainty. This is happening during a moment when, historically, gold should be doing the exact opposite. So here's the real question, and it's not a comfortable one. If gold is falling during a crisis, then what exactly is breaking underneath the system? Because this isn't just unusual. This is the kind of signal that shows up right before something bigger changes. And if you ignore it, you don't just miss an opportunity, you misunderstand the entire system. But before we go deeper, a quick note. This video is for educational and informational purposes only. It is not financial advice. Markets are complex, unpredictable, and involve risk. Always do your own research before making any financial decisions. Now let's get into it. For decades, actually for centuries, gold has followed a very simple rule. When the world becomes unstable, gold rises. War, gold goes up. Inflation, gold goes up. Economic fear, gold goes up. It's not just a pattern, it's a belief system. Gold is what people run to when trust disappears. It doesn't depend on governments, it doesn't depend on earnings, it doesn't depend on promises. It simply holds value when everything else starts losing it. That's why every major crisis in modern history tells the same story. During the 2008 financial collapse, gold surged. During the pandemic panic, gold surged again. Every time fear entered the system, gold responded, almost like clockwork. Which is exactly why what's happening right now feels wrong. Because the fear is real, the risks are real, the instability is visible everywhere. Geopolitical tensions are rising, supply chains are under pressure, energy markets are unpredictable, and even central banks are buying gold at one of the fastest rates we've seen in decades. And yet, gold is not rising, it's falling. And this is where most people make a mistake. They look at this and say, markets are random, or they say, this is just short-term noise. Or worse, they ignore it completely. But markets are not random. They can be chaotic, but they are not meaningless. And when something breaks a pattern this clearly, it's usually not the pattern that's wrong. It's the system that's changing. So instead of asking, why is gold falling? We should be asking a much better question. What is stronger than gold right now? Because something clearly is. And once you see it, you start to understand that this is not just a gold story. This is a system story, a liquidity story, a power story. And it's already unfolding, whether people notice it or not. To understand what's really happening, we need to step away from gold for a moment, because gold is not the problem. Gold is just the signal. The real story is something far more powerful: liquidity. Now, that word might sound technical, but what it really means is simple. Liquidity is access to money, cash, dollars, the thing everyone suddenly needs when the system comes under pressure. And here's the part most people don't realize. In times of crisis, the world doesn't just run toward safety, it runs toward liquidity, it runs toward cash, because when things start breaking, survival matters more than strategy. And in today's global financial system, that cash is the US dollar. Not gold, not stocks, not crypto, the dollar. Because global trade runs on it, debt is priced in it, energy is bought and sold in it, and most importantly, when stress hits the system, everyone needs it at the same time. And when everyone needs the same thing at once, something very strange begins to happen. Everything else starts getting sold, not because those assets are bad, not because they've lost value, but because they can be converted into dollars quickly. Think about that. Stocks get sold, bonds get sold, crypto gets sold, and yes, even gold gets sold, not because people stop trusting gold, but because they need liquidity more than they need safety in that moment. This is what's called a liquidity squeeze. And during a liquidity squeeze, markets stop behaving logically. Prices stop reflecting long-term value and start reflecting short-term pressure, desperation. Imagine you own something valuable, something you believe in, but suddenly you need cash urgently. You don't sell because you want to. You sell because you have to. Now multiply that behavior across millions of investors, institutions, and countries. Suddenly, even the strongest assets begin to fall, not because they are weak, but because the system is under pressure. And this is exactly what we're seeing with gold. This is not a collapse in trust. This is a shift in priority from safety to survival. And once you see it this way, the entire picture changes. Gold is not failing. Gold is being sacrificed to feed something bigger: liquidity demand, dollar demand. And this is where things start to get uncomfortable. Because if even gold the ultimate safe haven that can fall during a crisis, then what does that say about the system itself? It means the system is tighter than it looks, more fragile than it appears, and far more dependent on liquidity than most people understand. But here's where the story takes a deeper turn. Because while markets are busy selling, while investors are scrambling for dollars, there's another group quietly doing the exact opposite. They are not reacting. They are not panicking. They are not selling. They are buying. Central banks are buying slowly, consistently, and with purpose. And what they are doing right now might be the most important part of this entire story. Because while the world is focused on short-term pressure, they are preparing for something long-term and structural. Something that doesn't show up in headlines immediately, but changes everything once it unfolds. And once you see what they're doing, you start to realize this isn't just a temporary market reaction. This might be the early stage of a much bigger shift. While markets are busy reacting, selling assets, chasing liquidity, central banks are buying gold aggressively and quietly. Now, at first glance, this doesn't make sense. Why would the most powerful financial institutions in the world be buying while everyone else is selling? Are they wrong? Or are they seeing something that the market is missing? Because central banks don't behave like traders. They don't chase short-term price movements. They don't panic. They don't react to headlines. They move slowly and deliberately. And when they move at scale, it usually means one thing. They are preparing, not for next week, not for next quarter, but for something much bigger, something structural. And right now, that preparation is becoming very clear. Countries around the world, especially emerging economies, are increasing their gold reserves, reducing their exposure to the dollar, and quietly building a different kind of financial safety, not based on trust in another country's currency, but based on something neutral, something independent, something that has survived every major shift in history. Gold. Now, this doesn't mean the dollar is collapsing tomorrow. Let's stay grounded. The dollar is still the most powerful currency in the world. It still dominates global trade. But here's the shift. For the first time in decades, countries are actively trying to reduce their dependence on it, not abandon it, reduce it. Because the same system that gives the dollar its power also creates risk, sanctions, debt cycles, monetary shocks. All of these are tied to the dollar system, and more countries are starting to realize that relying too heavily on one system comes with consequences. So what do? They diversify, they build alternatives, and most importantly, they accumulate gold. Not because gold is perfect, but because gold is neutral. It doesn't belong to any one country. It doesn't depend on policy decisions. It doesn't require trust in another government. It simply exists outside the system. And this is where things start to connect, because now you have two forces moving in opposite directions. On one side, fast-moving markets reacting to pressure, selling assets to survive. On the other side, slow-moving central banks thinking decades ahead, accumulating gold to prepare. And the gap between these two behaviors is where the real story lives, because this is not just about gold prices anymore. This is about power, global financial power. For decades, the system has been centered around one core idea, the dollar. It became the backbone of trade, the standard for reserves, the currency everything else is measured against. And for a long time, that system worked. But now, small cracks are starting to appear. Not dramatic, not obvious, but real. Countries are trading in local currencies. Energy deals are being negotiated outside the traditional system. Regional alliances are getting stronger. And slowly, very slowly, the world is becoming less dependent on a single financial center. This process has a name, de-dollarization. Now again, this is not an overnight collapse. The dollar is not disappearing. But dominance doesn't end suddenly. It erodes, quietly, gradually. And during that transition, countries don't wait for confirmation. They prepare in advance, they hedge their risk, they build optionality, and gold becomes a key part of that strategy. Because gold is not just protection against inflation. In this context, gold is protection against uncertainty in the system itself. And that changes everything. Because if central banks are buying gold while markets are selling it, then maybe the price is not telling the full story. Maybe what we're seeing right now is not weakness, but distortion, a temporary disconnect between short-term pressure and long-term positioning. And history has shown something very interesting. These kinds of disconnects don't last forever. Eventually, one side wins. Either the market is right and gold is becoming less relevant, or central banks are right and something much bigger is unfolding beneath the surface. And if you're paying attention, the clues are already there. So now, let's come back to the question we started with. Why is gold falling during a crisis? At first, it feels like something is broken, like the rules don't apply anymore, like the one asset people trusted for generations is suddenly failing. But now, you see it differently. Gold is not falling because it has lost its role. It's falling because the system around it is under pressure. A liquidity squeeze is forcing investors to sell, even the things they trust the most. Markets are reacting to short-term survival, not long-term reality, and at the very same time, central banks are quietly doing the opposite, accumulating, positioning, preparing for a future that hasn't fully arrived yet. And this creates something very important, a gap between what the price is showing you and what is actually happening underneath. Because price is visible, but meaning is hidden. Right now, the price of gold is telling one story, but the behavior of central banks is telling a completely different one. And if history has taught us anything, it's this. When those two stories start to diverge, something big usually follows, because eventually, liquidity returns. Pressure eases, forced selling slows down. And when that happens, markets don't just go back to normal. They reprice, fast. Suddenly, everything that was being sold for survival starts being bought for positioning. And the move is often sharper than people expect. Now, this doesn't mean gold will explode tomorrow. Markets don't move on perfect timelines, and not every signal turns into an immediate outcome. But it means we are in a transition, a moment where short-term forces are colliding with long-term shifts, a moment where the global financial system is quietly evolving. And in moments like these, the biggest opportunities and risks come from what's misunderstood. Gold falling during a crisis is not a failure. It's a signal that liquidity is tight, a signal that the dollar system is still dominant for now, and a signal that behind the scenes, something much bigger is already unfolding. Because while markets are focused on today, central banks are preparing for tomorrow. And if you understand that difference, you stop reacting and start seeing. You stop following headlines and start understanding the structure behind them. That changes everything. Because in financial geopolitics, the biggest moves don't happen when everyone agrees. They happen when things feel confusing, when signals don't make sense, when most people are looking in the wrong direction. And this is one of those moments. So the next time you hear that gold is falling, don't just ask why. Ask a better question. What is the system trying to tell us right now? Because once you start asking that, you're no longer just watching the market. You're understanding it. And that is where the real advantage is. If this changed the way you see gold, if this helped you understand what's really happening beneath the surface, then make sure you subscribe. Because on this channel, we don't just follow the news. We decode it. And trust me, what's coming next in the global financial system will be even bigger than this. Stay informed, stay ahead, and I'll see you in the next video.